Are you worried about investing in real estate because you're wondering what could go wrong? Well, trust me, I've made tons of mistakes, and in spite of the fact that something went wrong on pretty much every house that we invested in, we're still fans of real estate investing, and it has made us wealthy and created financial freedom. My name's Kate Lynch. I'm a successful real estate investor with 17 Airbnb units across the Midwest. We focus on investments in urban areas in multifamily houses, triplexes, and duplexes. We also have a few single-family houses that we invest in Cleveland and the surrounding areas, as well as one in Indianapolis. When I say we've had things go wrong in real estate, some of them have been small and some of them have been really big, but ultimately we found that real estate investing is a very forgiving asset class as long as you go into it with good projections, solid data, and positive cash flow every month. Ultimately, in 9 out of 10 of the houses that we bought, all of them had some kind of a problem that we didn't anticipate, to the point where now when we make real estate investments, we assume something is going to go wrong. And I sort of feel like it's like waiting for the other shoe to drop. You're just waiting to find out what is the thing that's going to come along to surprise you. So we always assume that there's going to be some big dollar amount of unknown costs coming in. But in 9 out of 10 cases for our investments, the investments themselves were still successful. And in the 1 out of 10 where the problem we ran into was basically catastrophic, we still were able to pretty much break even on that property as an investment. So getting into a little bit of detail, I already described a little bit of our first problem that we had with our very first investment, in that it was a triplex property and the roof of the house went over a 3-layer porch, which basically held up the roof. And just a couple weeks after acquiring the property, in the process of doing some repairs, my husband discovered that there was some rotted wood that had been hidden underneath the wood on the porches. And the day he saw that, he was concerned that the entire roof was going to collapse. And he quickly was able to pull a construction crew off of another project, send them over to that house, and immediately put up a support system to make sure the roof didn't collapse. He still jokes about his fear that our very first investment property that we bought would be a disaster within a few weeks of buying it, as he envisioned the roof collapsing and the whole house falling apart before we had even finished our initial rehab on the house. Luckily, he was able to save that house from collapsing, and the total cost was about $30,000 above what we expected to spend on rehabbing that house. And yet that investment to this day has been one of our most profitable investments. And even with that $30,000 cost, as I went through in our last video, that house returns about a 25 to 30% rate of return, including the $30,000 in our investment as part of the basis for that return. The second house that we bought was another triplex in Cleveland. In this case, the house was moderately finished. It didn't need quite as much repairs as the first one. We had hoped to buy something in a little less need of repair when we acquired it this time, having experienced the strains of rehabbing the first house. The problem that we ran into with this house was that it had a driveway that was immediately next to the house next door to it. Technically, the two driveways, which ran side by side, are both at the minimum size required for a driveway, but because they were immediately next to each other, cars tended to use them as if it was one wide driveway instead of two individual driveways. And the house next to ours had long-term renters in it who had some big trucks and would repeatedly park these big trucks in the middle of the driveway, blocking access to the house for our Airbnb guests. If you have any experience with Airbnb, you would know that having your guest unable to park their car in the driveway or park their car at the house is a big problem. As well as it was just a nuisance for our guests if they needed to leave, if they were unable to get out of the house. And so ultimately in that situation, because of the issue with the driveway and also issues with the tenants in that house being troublesome for the Airbnb guests, about 4 months after we acquired the triplex, that house next door came on the market for sale, and we decided the only thing we could do to resolve this problem and not have it be an ongoing issue for Airbnb clients was to acquire that house as well. So we bought the duplex next door to the triplex. We knew from the beginning that it would have a lower return on equity than the triplex because it only had 2 units. And at the time, it was a hot real estate market, and the sellers wanted a higher price than what we had paid for the triplex. So we knew from a return profile it was going to be inferior to the other properties that we had acquired. It did not quite meet the level of the threshold that we were targeting for returns. And yet, in order to protect our first investment, we thought we really had little choice other than to acquire that property and take control of that entire driveway. Ultimately, that turned out to be a pretty great decision because once we had both the triplex and the duplex next door to each other, we had 5 units that we were able to use more like the way hotels operate, and that we could sometimes move people back and forth between the units. We also found there were tremendous efficiencies for our cleaners in having 5 units at one location. They could use the laundry machines at each locations and share linens and other supplies when they needed to. So for those 2 properties being next to each other, it turned into a bit of a blessing, even though we would not have purchased that second house, the duplex, based on the numbers if we had not had the issue with the driveway. The third triplex that we bought, another Cleveland property, one that is probably I would say, the most beautiful of the homes that we own in Cleveland. I love the house. It's similar to our first one with the big bay windows and hardwood floors and tons of natural light. But this one is in a nicer neighborhood, and it's just a gorgeous house. I was really happy when we found that house, and it seemed like the price was very attractive for our investment purposes. But what we did not discover until after we owned the house was that it had a major plumbing problem. I'm not into plumbing, so I won't be able to describe exactly what went wrong with that, but it turned into another $30,000 repair that was not anticipated in our purchase price. So while the returns on that house also have been phenomenal in the 25% plus range, I thought it would be an even higher return than that when we bought the house. And once again, having a lot of cash available to put into our investment when we acquired it beyond the initial projections was the key to our being able to make that property a success and ultimately get a tremendous return on something that was more expensive than we thought it would be, but still a very attractive, high-performing triplex. Once we had 4 properties, multifamily properties in the Cleveland area, we thought we would get a little fancy and buy something higher end. We ended up buying a beautiful single-family home in the Hocking Hills area. It was actually a 3-bedroom house with 3 bathrooms, but it had 2 living rooms and an office. So we converted the smaller living room and the office into bedrooms, turning that into a 5-bedroom house. I believe it was around 3,700 square feet in total, plus a basement. Just a gorgeous house on around 30 acres of property. And we felt really lucky to buy that house at an attractive price. Even though that house is in the Hocking Hills region, it's about a half an hour south of the most popular amenities in Hocking Hills, and that area didn't have very many Airbnbs in it. So we bought the house more on the pricing of single-family homes, not so much on the pricing of what Airbnbs were going for at the time. And we got a phenomenal price on that house. But unfortunately, that house ended up having an issue, again with the driveway, but a different issue this time. In that case, the driveway it went over a culvert where there was a stream that came down the hill and ran underneath the driveway. The driveway goes up to the top of the hill. And when we first looked at that house, my husband asked the realtor and the owner of the house, does that driveway ever flood? Because he could see that the culvert where the creek went through looked like it had potential for flooding. And the owner and the realtor both said it floods maybe once a year, maybe twice a year during the rainy season. And based on that, we thought it was probably okay. Ultimately, within a month of us acquiring the house, while we were having some repairs done at the house, just some minor remodeling work, there was a big rainstorm, and the water above that driveway was so high that it would have gone on the windshield of your car when you were driving. It was not a safe drivable area. We immediately reached out to the realtor and said, hey, take a look at this. Is this normal for the area? And he said, you know, we told you that happens once or twice a year. It's not something to worry about. You just have to wait until the water recedes before you can drive on that. At that point, we owned the house, so we were stuck with dealing with it. But in reality, over the next 3 months, that driveway was flooded to a level where it was undrivable at least 10 times. And we realized that there was no way we could have Airbnb guests in that house when they had the issue of either being unable to get into the property because the driveway was flooded, unable to get out of the driveway when it was flooded if they were already at the house. In particular, we had concerns about if there were any medical emergencies. There's no way emergency vehicles could get to the house in that situation, or possibly an even worse situation if somebody tried to drive on it and was injured. So the only solution there was for us to build a new driveway above that creek, which ended up costing around $50,000. Again, I'm blessed to be married to somebody who is a professional engineer who builds bridges and similar things for a living. So he was able to design that and get that built for us at around $50,000. If he had not been doing it, it probably would have been closer to $80,000. But in the long run, that still was an incredibly profitable property in spite of adding $50,000 or even $80,000 to the cost beyond our initial purchase price. In that house, our purchase price was, I believe it was $625,000 back in 2022, and we sold it 2 years later for $1.05 million after having rented it, generating $130,000 to $150,000 per year of revenue, renting it on Airbnb in the meantime. So it was a phenomenally successful investment, and we were thrilled to be able to take some gains out of that to put into other real estate projects. But it was a pretty expensive problem that we had not, well, it was a pretty expensive problem that my husband had identified, and we made the mistake of, I guess, believing the realtor and the owner when they said this happens once or twice a year, when ultimately it was happening more like, you know, once or twice a month, if not more frequently than that during the spring. The next investment property we bought was in an area called Geneva, Ohio. There are a bunch of wineries there. It's about 45 miles east of Cleveland. Another single family home with a pool that we thought would make a great destination vacation home for Airbnb rentals. We were buying it as a single family home and again, turning it into an Airbnb. That's a strategy that I like a lot because when you buy a house that's already an Airbnb, you tend to pay a premium if the house is successful. Whereas if you buy the house based on single family home, owner occupied pricing, you can get a much better price and then convert it to an Airbnb and make a tremendous profit on it. The problem with that house, we bought it in the winter and it had an in-ground swimming pool, and we made the mistake of not doing an inspection of the pool. It wasn't a very big pool, and we thought, I guess we relied on the disclosures by the seller about it, that there was nothing wrong with it, when ultimately, when we opened the pool, we found that the pool liner had entirely collapsed into the pool. So again, that was a mistake that we made. I found a beautiful house at an incredible price, and I could tell that the house itself would be an attractive Airbnb. I hadn't considered the possibility that the pool could be completely destroyed underneath the winterization, but it turns out it had not been winterized at all. The couple that we bought from was going through a divorce, and for some reason they made the decision just to put the winter cover over the pool without going through the process of winterizing it. So that cost us around $15,000 to fix the damage that had been done because the pool hadn't been properly winterized. And again, the house is an incredibly profitable investment, and adding $15,000 on top of I think we paid $350,000 for that house to buy it. So another $15,000 on top of it did not hurt our investment returns. I mean, it impacted our investment returns, but ultimately it's a phenomenal property and we're very happy with it. To date, we've acquired 10 total pieces of real estate, and the 1 out of 10 that turned into a total disaster was a house that we bought in Ellicottville, New York. So because we owned 3 houses with pools in the Midwest, we found that our cash flow was very influenced by seasonality. So we were generating a whole lot of cash flow in the summer from the 3 houses with pools that rent at super premium rates when the pools are open, and our winter cash flow was very lean. So we had the idea that we could buy a ski house to offset that seasonality somewhat and generate strong cash flow in the winter. So we found a gorgeous house in Ellicottville, New York, about a 3-hour drive from Cleveland, that we thought would solve that problem. So when we bought the house, it was already an Airbnb, but it was performing very poorly on Airbnb. It had few reviews and few reservations. It had terrible pictures. And our idea was that with our skills with Airbnb, we could do a minor amount of interior work, just painting and replacing some outdated carpet, and we could turn this into an incredible, profitable winter vacation getaway. So that actually worked better than we expected, and unfortunately, it worked so well that the neighbors became disenchanted with our property. Even though the area was made up of vacation homes, people who were going to ski at their second home, some of the neighbors did not like having an Airbnb in the area. They preferred only to have people who owned those homes as second homes. In my research on Airbnb investing, I had read Avery Carl's short-term rental investor guidebook, in which she said never buy a house with an HOA. So I did know that going into it, that buying a house with an HOA was a problem. And I made the rookie mistake of thinking that because this HOA currently was allowing Airbnbs, it was okay to buy this house even though it had an HOA. Well, the terrible thing about HOAs is that they have so much control over your property and can change rules very quickly if they choose to. Within a year of us acquiring this house, the HOA came out with a letter stating that that HOA would no longer allow anybody in that region to rent their house on Airbnb, and that anybody who was renting would be required to stop renting immediately. We had a calendar full of bookings for that winter and had to fight the HOA to try to keep that going. And we went through a lengthy lawsuit with them showing that, I'll just say we went through a lengthy lawsuit and we felt that our position was very strong and we lost the lawsuit anyway. So we spent about $50,000 on fighting the HOA. And because we lost, we were required to stop renting the house to short-term investors. We could have rented it to long-term investors, but the returns just would not make sense for that property as a long-term rent investment. So we had to sell the house. We did have 2 years of winter revenue, and we were surprised to find that we also had strong revenue from that house in the summer because the town of Ellicottville did a great job with promoting festivals and things like that in the summer. So we ultimately were around a break even on that house as an investment, which I guess is a good thing that we ultimately didn't actually lose money on the house, even though we also didn't make money on that house. So long story short, when you invest in real estate, things do go wrong. And it's critical that you go into real estate investing with a pretty solid liquidity position. There's no way you can predict everything that's going to go wrong in a house. If you own, like we do, at one point we owned 10 properties. It seems like there's always something coming up, this roof, that HVAC, in the pool, the driveway, there's always something that comes up. But if you're making your investments with a projected return in the 25 to 35, in some cases even 40% projected returns, and then something goes wrong and it pushes that return down, your return is only going down to still north of 20%. So we are big fans of real estate investing in spite of the fact that a lot of things have gone wrong. They always surprise me, and yet at the same time, I feel like I'm expecting something to go wrong every time we buy a new property. I'm just sort of waiting for what that thing is. If you like hearing about these real estate investment successes and errors and failures, we'd love to continue to share more with you. We hope you'll like the video and subscribe to this channel so you can keep hearing more, and let us know if you need help on your real estate investing journey. I love talking about investments and real estate in particular, and I'd love to connect with you to hear about what you're doing and see if we can help you on your real estate investing journey.